Today I want to speak about Apple's pre-earnings, which is happening in 2 days. And I want to share my valuation, technical analysis, and what to expect for the earnings on the 27th of January. Hello and welcome back to Family Investment. My name is Alex Ko, and here I want to present to you my findings on what to expect for Apple's earnings on the 27th of January. Is Apple going to drop $117 per share, or will it pop up to about $187 a share? So before we get into the valuation and technical analysis, let's review what we're expecting from Apple. So the big expectation from Apple, first of all, is the iPhone 12 revolutionary sales because of the first 5G phones and because of the phone cycles that a lot of people are upgrading to the iPhone 12. And also the second thing to expect is the laptop, desktop, and iPad, because we're all working from home, kids are working from home. And the fact that Apple made a move with the M1 chip recently, they should be reducing their cost. And finally, the third point that I want to share is the digital growth. Apple's been pushing for digital growth for at least the last 2 years with subscription, Apple TV, fitness, and also the apps in the app stores. So will we expect Apple TV to outshine as much as the likes of Roku, Disney, and Netflix? Or will Apple TV be on its last legs? And also the last two, which is less likely, but I really want to hear for the future of Apple, especially long-term shareholder like myself, is the self-driving cars. There's been rumored surfaced about 4 weeks ago that Apple will be releasing their own self-driving cars. When and where and how much are they spending? And also the wearable glasses as well, the augmented reality. That's what Apple is going down, not virtual reality, but augmented reality. That's what I believe they think is the future for education, for medical. Alright, let's go to my chart that I've plotted here. So on this chart is basically free Yahoo Finance. I work on the free stuff. You guys can do the same, but I'm sharing this with you here. So on the Apple chart here, I have drawn a line, as you can see, at a huge support at 126. So if anything to happen, if they fall, 126 seems to be the next support line which has been established. But one thing for sure that you can see today, Apple hitting about 142.5 or above 142 is them breaking through their top ceiling as of today. Okay, they've tried that ceiling 3 times, and on the third attempt they've broken through because their expected earnings. Investors are expecting good stuff coming out this earning. So as you can see, the last time that you should be buying Apple is a circle green dot there when the stochastic was around about 20. So that's when it's close to 126. That's when it's close to the momentum, the moving day average of 50 days. Okay, they're very close to the moving day average, so it's time for them to start breaking new ceilings again. If not, they're gonna start falling below the moving day average 50, and that's when we're gonna start seeing a crumble in this Apple stocks or Apple momentum. So for the next part, I will be speaking about the intrinsic calculation. This is the tool that I use on my daily basis on stocks valuation to determine how much to go in and how much risk I am taking on. So you can always use the Graham Intrinsic calculator on the website here, link below on my website on Family Investment, and you can check it out and use it for free. So first, I want to bring to your attention that the EPS I've taken for 2020 all the way up to 22 with the expected Q4 is 3.41. That's adjusted after the stock split. And the growth rate, as you can see from last year's and this year's earnings, around about 7.5%. With Apple iPhone record sales, I've established a 7.5 growth rate. And you put in the calculator, you will only see 117.50, so $117 per share for Apple at the growth rate of the expectation. It's a bit strange, but let's reverse engineer it. What if the growth rate for this year and also Q1, Q2 comes in about 8%, and their growth EPS comes in about 4 and 8%. Therefore, Apple stock should be $143 per share. That's what is breaking the ceiling today. That's what folks are expecting for the next quarter and the quarter after that. So it's the Q4, Q1 momentum going. That's why it's sitting at 143 just now. Folks are expecting good earnings, record-breaking earnings, and also slightly better than expected growth rate. So for next, what are we expecting for the entire year of 2021? Okay, let's assume that the digital growth sales are going well, iPhone sales are going, no shortage of chips. M1 MacBook Pro, M1 processing for your laptop, everything else goes really well. We're expecting EPS of 5, okay? 5, meaning we're keeping up to the momentum of Q4. We're hitting 5 EPS for the entire year, and a growth rate of 8.5% because more things are being sold. There's cycle of phones, cycle of laptop, digital sales are growing. Great year for 2021, keeping up the momentum. Apple should be hitting $187 per share. That's the price target for 2021 at the end of 2021 before the Christmas. This is what Apple should be expecting if they do really well, holding this momentum. But there's a couple of concerns, of course. The chip shortage of 2021. Taiwan Semiconductor is just recently saying that they're going to pledge their priorities for the car manufacturers. So what happens to Apple's M1 chip? And also, we cannot just sustain on the iPhone cycle. We need the digital sales to go. We need the laptop, the Apple, the wearables to still keep growing. You know, how much more can people buy in this current climate? And also digital growth, real genuine sales, if we have seen in other avenues. And also the capex that we need to watch out on what else Apple will be spending for future growth. Is a cash-rich company. They need to start spending on things that will grow to impress us, like self-driving cars, and also the wearables. So this is me on Apple's pre-earnings. I shall be reporting on the 27th of January when it comes out. Break it down basis by basis to see where we're going for, to see whether they can sustain my price target 187 if it holds. If not, if they do badly, then they should drop to 117 as what I think on my analysis here. I hope you like and enjoy this. Please do click like and subscribe. Hopefully to see you more future videos where I always give everybody value.
Alright, before I say goodbye, please do like and subscribe on my YouTube channel, follow me on Facebook, and if you want, support me on Patreon as well, so I can produce content like this every single day for you guys, to give you guys value. So please do share, share this video to help us grow our YouTube channel, yeah?
Yeah.
Alright guys, 3, 2, 1, bye bye!